All right, everybody. A little bit of a late start today. I was working on a project and lost track of time, so I do apologize for that. Welcome to the live stream. My name is Jacob Gabbard. This is Invest with Jacob. We are demonstrating two indicators today. We're going to be doing our Pivot Point Pro, which is our standard indicator here. We use it on the weekly and the 5-minute chart, weekly for swing trades, 5-minute for day trades. We'll be demonstrating the day trading portion of that today. And we'll be doing Squeeze Sniper as well, which also actually works off the 1-minute chart, but trades the whatever time frames you want. We'll go through it here in a minute. So, welcome. If you've never been here before, hope you enjoy it. We'll get to the live trading here in about 18 minutes when the market opens. But first, we're going to go over where the market's at and what the indicators are and how they work, and then we'll get started. So, give me 1 second here because I'm running late. I do have to set up a couple of things. Market yesterday tried to give a down move, ran back into the 8, which is a momentum indicator. You can see that red line on the screen there. Bounced off of that and came back up, and overnight, I believe, made a slightly higher high. I'll have to double check that, but I'm pretty sure it made a 1 tick higher high. Yeah, 74.54. Oh, did it miss it by 50 cents? Overnight high was 54.25. I missed it by 50 cents. So I would expect, maybe not today exactly, but probably today, I would expect them to break over this high. I don't expect today's high to hold long term. You know, they can pull back, of course, and do those types of things, but I don't expect them to come up within 50 cents today and not go just get a new high. So 1 second, I gotta get my trading software up and running, and then we'll be all set with what I need. Perfect. All right. Okay, so for the kind of intermediate picture here, we are looking for a pullback of sorts. The primary path, the path that we would expect most, is a pullback into the 7100 region, which also coincides with this consolidation area, and then higher from there. This would be a wave 4 and a wave 5, where you have your A up, your B down, and your C wave moving up here. We're going to move these up now. That would be the primary path of what we're looking for. Now, that doesn't mean that we are expecting the market to pull back right this minute. Like today is going to be a pullback. That's not what I'm saying. I'm saying we're looking for one. We're waiting for one patiently because we've already traded long on this move on the way up. We traded off of this low down here up, and then we got in right around here and traded up and did really well. And so now we're waiting for the next trade setup. The easy part of this trade is over. Now, if you try to get long, you're chasing. And if you're shorting, you're just lighting money on fire because you're getting run over day after day. So we're in patient mode. We're just sitting and waiting for the next swing trade opportunity. And when it presents itself, we'll be happy to take it. But right now, if the market continues to grind higher, then so be it. Now, again, the market is, or not the market, we are looking for a pullback. So whenever that happens, it happens. Does that mean they can go higher? They can't go higher? No, it means they definitely can go higher. They can go up as high as they want to go. Until the market exhausts, they can press higher. We're just not trading it, is all I'm saying. When we see that pullback, we're expecting it to come down into this region and then higher. Our alternate path, we still expect them to come down to this region. It is the consolidation. It's a back test of the prior highs, and then a failed bounce, and then down into this region, the 6,800 region, which was the most traded zone on the way up. So you expect them to return to that at some point. And if that's the case, we'd look for that and then potentially higher, and that would target more like 8,000. So 8,000 is a viable target for the S&P depending on the path that we get. This path here, the top path would target probably 76, maybe even 7,700, but I don't think much higher than that given the extension we got on wave 3. And then the final path that is possible is the bear path. Always have to have a bear path, same start, bounce to like we're going to go back to the highs, fail, and then break down into here. And then from there, you get a setup and a breakdown overall. So those are the three paths, with the short pullback and higher being the primary, the deeper pullback being the secondary, and then the bear breakdown being the kind of deep alternate path that we'll see what happens. This could be the top. It just doesn't have a great 4-5 structure up here to give us a final topping area. We had a very similar run to this in October of 22 when we made the low. It went straight back up, and then same kind of deal, no pullbacks, all green bars. Then it gave us this, and then it gave us this, and then we got October of 21, I should say. And then in January of 22, we did this. So this is kind of what we're looking for. We're looking for that 4-5, then a deeper pullback potentially to 8,000, and then around that 8,000 zone, we could see the market potentially top. So that's what we're looking for on the ES. On the NASDAQ, which this is actually SMH, on the NASDAQ, same concept. That's still the ES. Same concept. We are looking for a shorter pullback as our primary. Oh my goodness, I can't click on anything. Into this 27,360 zone, the last consolidation. From there, we'd be looking for higher. And then if the secondary path would be that they bounce and fail down into this 25.2 zone. That's their most traded zone on the way up. And the third path would be the bounce here and fail. So those are the three paths on the NASDAQ, both of them very similar. We're just essentially waiting for this move up to exhaust. Now, yesterday's move on the NASDAQ was a little more bearish. Nothing truly bearish about it. I'm just saying in comparison to the ES, it was a little more bearish, but nothing bearish overall. On the NASDAQ, they did the same thing. They pulled back to the 8 here. It should be red. I don't know why it's blue. That's annoying. They pulled back to the 8 and bounced off of it. And if you don't know what the 8 and the 21 represent, I mean, they're moving averages, of course, but in the theory of market, the 8 EMA is the momentum indicator. So as long as the 8 is above the 21, price is bullish. And if price is above the 8, then momentum is very bullish. When price gets below the 8, momentum is weakening. When price comes down to the 21, that is a trend test. The 21 is your trend keeper. If they hold the 21 and get back above the 8, then the trend continues, momentum is back up, and we would look for higher highs. If they bounce back to the 8 and fail back below the 21, then the trend is weakening or failing, and we would look for a potential reversal in the market. So that's how we use those moving averages there to kind of give us an overall market trend. You can see on the way up, the 8 is it just rides the 8 if it's a strong trend. So you can see they came up, back tested the 8, 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 and kept going. So they never got below the 8 on the entire way up. And typically this is uncommon. This is actually historical for the stock market, this move that we're seeing on the NASDAQ and ES, and especially like SMH, things like that. So those are things to keep in mind. Until that trend breaks, the pressure is heavily up, and there's no reason to short this market. As far as the indicators go, we'll go to our next chart. We are going to be trading, these are Mentor Q levels, very important. If you don't know what Mentor Q is, they give you the option levels of the day. Let me zoom out so you can see them. And we'll just do it on the SPX here real quick so that we can see where they are. So call resistance, you got 0 DTE call resistance, you got 0 DTE gamma wall here. This is where heavy call options sit. And when price is above these lines, so this is a very, very heavy level, as is this. When price is one of these is going to be intraday. Yeah, so that's the intraday one. This is your end of day. So this is your really heavy line. This is really where the market makers are underwater. If they get above 74.50 on the SPX, then the market makers are very underwater at that point and have to hedge, which means they have to buy futures. And if they're buying futures, that drives price higher. Market squeezes. This is how you get gamma squeezes. To the downside, you have put support down here at 73.50 on the SPX. Below that, and they're underwater on the downside. Now they have to sell futures to hedge. And they have to sell futures to hedge. And when that is the case, that pushes price down and so on. The one-day minimum is where the market should not bottom, but kind of hold. What I mean by kind of hold is they can get below it. So they could come down here today, spike below this, and come back up. In general, 90 to 95% of the time, they're going to close above this level. So if they get below it, more often than not, they're going to close back above it. Think of it as a shoreline. We watch the tides come in. We know where they come to. We build our houses based on that, on the oceans. And we know that most of the time, 90, 95% of the time, the ocean's never going to go past that. However, when a hurricane comes in, it drives that tide past where we think the water should hold, into our homes, into the streets, into whatever, and it causes wreckage, right? And the reason it causes wreckage is because, well, it's devastating. This is devastating to market makers if they get below this level. They really have to start selling hard at that point. And if they cannot recover this level, we get what we call a hurricane day, where it just starts to go. And once it goes, it's a waterfall and it's strong. Okay. Same thing on the upside. You just think of that as the upper band shoreline, the one-day max up here at 74.65 on the SPX. Getting above that is very, very difficult. Usually they will close back below it by the end of the day. So keep those things in mind. We're going to split screen this. Let's do that first. And then we're going to split screen this. And we're going to put the SPY over here. We're going to put the, let me make sure I have Pivot Point Pro on. I do. EMA is okay. Mentor Q, that's fine. And then we won't have Sniper over here. And over here, we're going to have the ES on the 1 minute chart. So on the left, you're going to have Squeeze Sniper. And on the right, you're going to have Pivot Point Pro. We can do this now. Pivot Point Pro will just give you buy and sell signals. It is looking for reversals in the market. So if we go look here, you got a sell overnight up here at the top, looking for a reversal. You got a huge sell down. You had some buys at low points here, some smaller moves as well. Now, to be clear, we don't trade the after hours movements on the Pivot Point Pro. The reason is it's lower volume. Pivot Point Pro looks for a lot of things, volume being a big one for reversals. It still does okay in the overnights, especially after our updates. So you can trade it overnight, but it's not the best. So I suggest you just don't stay away from it. But if you look at, let's see, yesterday at the open, oh boy, we need to turn this volume off. Was it yesterday? I thought we got one yesterday, right at the open. Am I missing that? I thought it was yesterday. I thought we got a sell signal right here. Maybe not. Anyway, we had a, thought we had a sell signal there. At any rate, it's looking for reversals in the market. It's not found a lot lately because there haven't been any reversals. The market is going straight up. So our day trading lately has been, oh, am I on the wrong? Oh, yeah, SPY 5 minute. That's why. I need the 5 minute chart. And yesterday, yeah, okay. I was like, I'm pretty sure there's a sell there. There it is. Okay, so we got the sell right at the open yesterday, and then got this buy that failed. So you had a winning sell ticket, you had a losing buy ticket. Should have been a winner for the day. To be fair, I don't know. And the only reason I don't know is because I was mistakenly looking at the wrong chart. Did not think we would get a sell signal. Went and took care of some things, came back, realized there was one here. So the people in my room took it because they have the indicator. They got the sell, had a winning trade here. I got to take the losing trade. So I had a losing day yesterday, but overall, I believe it was a winning day. So you had one winner, one loser yesterday. But that's what we're looking for with Pivot Point Pro is reversals, and it does a really good job of catching them. Now, if we're trading like we've been trading literally since March 31st, the market is straight up, and it's really hard to trade. So when you don't get reversals, an indicator that's looking for reversals is either not going to trade, or when it does trade, not do great. And so we didn't have a great April. It was actually a losing month for us. We have those from time to time. But overall, we're up $120,000 in 2 years on a $100,000 account. So I think we're doing pretty good overall. You're going to have anomalies in the market. You're going to have where the market doesn't perform the way it's supposed to for a period of time. And that's what people don't understand about trading is its probability. You're trying to trade the highest probability trades you can. And what that means is you're going to have sessions of time where things don't go the way they're supposed to. If you think about flipping a coin, theoretically, you will get 50-50 over time, law of large numbers. If you flip it 10 times, you might get 9 heads and 1 tail. And if you were betting tails, looking to just break even, you got absolutely railroaded. But that's not normal coin flipping behavior. Normal coin flipping behavior is you're going to get some tails, you're going to get some heads, and it's going to end up over time being equal. Same thing with trading. We're looking for things that are going to play out 60, 70% of the time, but that doesn't mean that every 10 trades you're going to win 6 and lose 4. It means that you might win 10 in a row and you might lose 20 in a row. And then you might win 40 in a row. Very rarely do those things happen. I'm just giving you an idea that strange things can happen in the market, and it doesn't mean that anything's broken or doesn't work. It just simply means the market is doing something different. We are in a historic run off of the lows that has never been seen before in the entire history of the market. It's the fastest move in the history of the market. So that's what happens in bubbles. That will eventually end. We will go back to normal market conditions and we will be fine. But you just have to trade correctly to weather those storms. You have to have good sizing. You have to have good risk reward. You have to have discipline and stops. You have to do all those things. And that's the reason why the greatest trading systems in the world will be humbled at some point for a period of time, because nobody can predict every trade correctly, or they'd be billions. They would be the richest people in the world. And that's not how the richest people in the world get rich. So, that's what you have to understand about Pivot Point Pro. Is right now it is struggling, and that's the reason why. On this left side, you're going to get Sniper. It does give you your long entry, so time frame 5 setup. You got long here. It caught the squeeze. It's looking for squeezes. Caught the squeeze, gave you your profit, trailing stop, etc. There is a repainting issue with this. It doesn't mean it doesn't work. It actually works really, really well. It just is really confusing sometimes because it'll be on a bar and then it'll move when we repaint. So when the bar closes, so this is the 1 minute chart. This is the 5 minute time frame we're trading. So when that 5 minute bar closes, if you change your chart, this entry can move because of how TradingView works. It has nothing to do with us trying to do anything different or cheating you or anything like that. It's just the way TradingView works. We're working on a fix for it right now. But it still works very, very, very well. But it gives you all the information you need, your entry, your stop. It gives you a grade on the trade. It tells you when to get out, how to trade your stop. And then we also have our new version, which, what do we got here? 1 minute? I got 1 minute. I got to go fast. We have our new version, which is in the middle of a trade right now, if I can find it. We got in pretty good, so let me find that trade. Yeah, so right here's the new version. We had an entry at 73.68, a take profit at 73.77 and 83. We hit both of those. Take profit 1 at 77, take profit 2 at 83. And then we have a trailing stop that I believe is still active. Yeah, our stop right now is at 74.02. So the way it's designed is you take 75% of your money off at take profit 1, 15% off at take profit 2, and then you leave a 10% runner. So you have no FOMO if the market does what it did and keeps going up. You don't try to chase. You just have action. So we got in at 73.68. We have contracts right now that will stop out at 74.02 for a 40-point gain, but right now they're up 80 points or so. So just absolutely killing. Absolutely killing. And then we can get reloads on this as well. We haven't gotten one yet. I was a little surprised. I thought we'd get one in here, but we get reloads where it pulls back, finds a level, reclaims, and goes, and it'll reload that entry. So you can get a new entry in here. All right, we are open, guys, and I'm not ready. Yeah, it's all right. We're not getting a trade right now. We are open. We'll look at the charts here. Let's move this up. Had to go quick there. All right. So Squeeze Sniper on the left. You can get that in the link in the description below. Pivot Point Pro on the right. You can get that at investwithjacob.com. You can also get in my rooms where we go over all this. You get all my trades, all my advice, everything that I give out. You get it all. And that would allow you to see kind of how we work. And you get a 1 week free trial there if I didn't say that already. Sorry, I'm trying to do like 6 things right now. You get a 1 week free trial there, and that will let you get in, see the products, hear my takes on things, go to the live calls, hear what I have to say about stocks, recap all of our trades, why we do them. It's another thing. I give you all of the information about our trades. You know, why did we take this trade? What are we looking for on our swing trades? Why is the market doing this, et cetera, et cetera, et cetera. So check that out. Like I said, nothing to lose there. You can come in for 7 days, get the information, and decide if it's for you or not. And if it's not, then you didn't risk anything and you got to see how it all works. All right, moving down here at the open, they gave us a move down on PPI, the catalyst at 830, and bounced it a little bit back to 70 or back to 35, which was resistance. So now if they come back and take out 35, they're very likely headed to 50, but if they break this low, then 7,400 becomes the downside target. Hopefully you guys are having a good day. I will be out Friday, so there will be no closing call tomorrow. There will be a closing call today. If you guys didn't know, I do a closing call every day, Monday through Thursday at 3:55 p.m. live, where I take questions, do the ES, the NQ, and a couple of stocks, so you can have an idea of what we do as well. So check that out as well. Moving down here, so we would be looking for a buy if we're going to get a trade. I got to set up for that. So let me do that. Right now, I'll move this so I can see it. 738 is the strike that I'm looking at. And trying to put on my readers. I almost put on my sunglasses. That was going to make it harder to see. Getting old, I can't see shit anymore. I don't think we're going to actually get 738. They're probably going to have to buy it up a little bit for us to get the price, but we'll see what we get. Came down to the pre-market low so far on the SPY, 737.20 basically. We'll see if they can break through. If they break through that, then we can start to look at trend day possibilities, which again makes Pivot Point Pro less effective, but does work well for Sniper. So that's why we have the two different indicators. They work very differently. One's looking for reversals, one's looking for kind of continuation. I have two puppies, a Mastiff and a mixed breed, and it is like puppy dome in here. Two dogs enter, one dog leaves all the time. I don't know if you guys have ever seen Mad Max Welcome to Terror Dome or Thunderdome, and they always chant two men enter, one man leave. That's what they're constantly doing, just constantly fighting and wrestling. Like in a playful way. They don't hate each other or anything. They love each other. They're best friends, but it's like, God, calm down sometimes. Thank you for pointing that out. After hours low is actually our low, 736.66. So they bounced the pre-market low, which happened on PPI. The after hours low is actually a little bit lower than that. At either rate, we're still looking for them to hold here and potentially give us a reversal. If they do, we'll take a buy. And we'll look for them to have to get to getting back through 35 is really the level. They can if they hold the low right here, they can get back through 438 or 28, and that will kind of tell us we're going to 35. But this low right here is kind of important for that. Let's look at some. Let's look at some. Okay, they push through this low. That takes away what we would call a reclaim option. Reclaim option means they make a low, they get up to a resistance, they come back, they don't break this low, and then they get back above that resistance. That tells you they want to go from there and push. When they fail this low, then they obviously weren't ready for that. So a standard reclaim is you have a resistance level or a support level, actually. You come down through that support, you come back up to that support, and then you come down and you don't break this low, And as soon as you get back up to that level, that tells you that they want to go to the next level up. There's some free trading advice for you, or whatever, tutelage. Breaking down here, though, through 28 and now 13 is their last kind of chance to hold. Well, it's not really. They have the pre-market low and stuff. But in general, when this breaks, you're looking at 7,400. And then we'll see what happens at 7,400. 7,400 has been the level for the last few days. If you look at it on a bigger chart, you'll see that they came down to 7,400 several times before they broke down yesterday below it. And then yesterday, once they hit 7,400, they reclaimed it and they went immediately to 7,450. So if you're ever looking for market shifts, we can do this as well while we kind of wait here. If you're ever looking for market shifts, you're looking for the market to come down, bounce, come down, bounce, and basically create a shelf of lows. If the market then comes down and breaks that shelf, that's going to be your tipping point for the bulls. So as they go down, they can go down forever. They never have to come back here. But if they do, like they did yesterday, and they reclaim this zone, then they're going back to the top of this zone and potentially further. And it's a great trade almost every time. In fact, that's what the trade was based on over here. If we get all the way back over here somewhere, where was it? Oh my gosh, so far over. This trade down here, actually is a little lower. This was based on the break of 68. And then our runner is now at the next stop up, which is 7,400. But they got above 7,432, came back down. Actually, it was over here. Sorry, where's 7,400 at? Oh, this is where they got above and just stayed above and consolidated. And then once they do that, then you're ready to go. You can put your stop at 7,400 and get long there. But that breakdown of the other level is where the sniper entered last time. And then we caught the squeeze. So if we see up, we're likely to see what we would call a reload on here. For the new version of Sniper, you guys don't have that version yet available. It's almost done. I know I keep saying that. I'm really sorry. It really is almost done. It's just that we got to get all the bugs out. I don't like the bugs that are out right now, and I'm not putting out another version with bugs in it. So, I mean, it may have bugs. That's just life and tech world, but not as many. I don't want as many as we have right now. I thought we deferred to the lower of the pre-market low and after hours low. We do, and maybe I covered that, and I just saw your question. But yeah, the after hours low is the technical low of the day, which they're basically at now. The pre-market low, 74.10 on ES, is the low of the day. So that is 5 down on ES. No, I would not call that 5 down. Remember, 5 down has 2 jags in it. It's not just 1, 2, 3, 4, 5. That's 3 down. 5 down is then this is 1, 2, and then you have a 1, 2 up here, and then 3 of 3, 4 of 3, 5 of 3, then you get 4 and 5. There's the break of the pre-market low, or after hours low, whatever you want to call it. And what was did they get through it here? Did they get it exactly to? Yeah, they got below it here as well. So they've broken the pre-market low. That is a good sign for the bears in general, unless the bulls reverse it now. If the bulls reverse it now, then it's not a great sign. Then it looks like a failed breakdown, and we're going back to the highs. If they follow through, then it's a good sign for the bears. So what the bears want to see now is a back test on the, not the 1 minute chart, on the 5 minute chart. They want to see a back test of the 8, and then or the 21 or VWAP. Any of these are sufficient, but you'd prefer the 8 for momentum purposes, and then back down below this, and you very likely have a trend day in that direction. However, if the bulls can find some firepower here, then we would look for a potential squeeze up. Oh, I see. See, and this is why Pivot Point Pro has struggled. in this current market setup conditions, if you will, because this move down and this move up created a buy over here, a buying opportunity, not necessarily a buying signal. The buying signal came in here and failed. Then you got another what you would look for a buy, and they never got through the buy cycle. Then they come back down in another selling cycle or continue the selling cycle. And because you've had two failures here of the buy cycle, it tells you that you're getting lower highs and lower lows, which means that the trend is down for now. And so you're very unlikely to get a buy signal until you can complete a buy cycle and create a high, a low, and then here you would get the buy signal, which is where you want it. You don't want the buy signal here on a trend down with lower highs and lower lows incoming. So there are times you're going to miss moves because of it, but you already would have had two losing trades if in the old version of Pivot Point Pro, where it was just taking every buy signal and sell signal. If ES triggers on a squeeze, can we trade SPY options? Yeah, you can. I would prefer using SPY if I was going to trade options because they are a little different. So what I mean by that is, sorry, I'm just looking at what's going on the chart here real quick. I would use Sniper can be used over here too if I've got if I turn it on real quick. Move over. I'm sure we've got something. That one stopped out, but here's your short at 733.66. It actually got down. Oh, it was an hourly time frame. That's why I was going to say it got down to 731, which is 2 points, but it was an hourly. It was looking for a fall off and then didn't get it. So it was sort of right, but then not right. But yeah, I'd be using it on. If I was going to trade SPY options, I would be using Sniper on the SPY, not on ES. Oh, that's the 5-minute chart. You got to use it on the 1-minute chart, but at any rate, that's the point. That is not the high from the overnight. 75.54 is the high. You're looking at the. Oh, you're right. 1, 2, 1, 2, 3, 4. No, well, let me see. No, I'd still want another 4, 5. This is still 1, 2, 1, 2, 3 of 3, 4 of 3, 5 of 3, and even this 4 of 3 gets into this territory right here, so I don't like it at all. I would not love this as a 5-wave move, and we're not looking really for a 5-wave move here, to be quite honest. RTY strike. Oh yeah, I wanted to look at supporting evidence here. RTY down 1% almost. NASDAQ slightly green and ES red. Now, when you have ES and NASDAQ doing different things, and NASDAQ is green and ES is red, almost always that reverts to selling, where NASDAQ will catch up to the ES, not the other way around. But if you have ES green and NASDAQ red, it's kind of 50-50 because NASDAQ does a lot of catching up and ES really doesn't. So I would look for some selling here, to be honest with you. Doesn't mean we're going to get it, but more often than not, when the ES is red and NASDAQ is green, NASDAQ catches up to the downside. One of the things, just so you guys understand how it goes. By the way, this is starting to look like a trend day. They back tested the 8 right here and the most traded zone and have now made a lower low, which usually leads to selling. Just so you guys understand, the reason that we're close but it takes so long is we have to put in a new iteration of the code for Sniper, put it on the chart, then wait for a trade to come up, make sure that trade plays out exactly how it's supposed to, make sure it's giving us the right levels, make sure it does X, Y, and Z, and that takes a while. I mean, that can take a whole day just waiting for a trade to come up, or 2 days sometimes. So it's not that we're not doing stuff over and over again, it's that we have to wait for our test to be able to be performed, and then once it's performed we can do another iteration, and then we got to wait again. So it's not so much that we're not working tirelessly, it's that we can only work so long and then we have to wait for the market to deliver. There's the selling. Again, once you get that back test, here's a short on Sniper. Your stop is 74.15. Your target is 74.08. I'm sorry, your entry is 74.08. Your target is to be determined because of the way it works. It is a series of inputs, and when those inputs weaken and change, that's when you take profit. So I can't tell you what the profit level is because we want to capture as much as the squeeze as we can. So as long as the market has the conditions for a downside squeeze here, we're going to let the trade run, and then when those conditions change or we hit the stop, one or the other, that's when you are out of the trade. So take profit one I can't give you on this version of Sniper because of the way it works. So you just got to be locked in on the trade. So anyway, you got a Sniper trade 74.0875, and it's a grade B, so not the best entry ever, which is because we're getting in so low here. It's just how it works. You got to wait for the conditions to hit and where they hit on the chart, and so it's looking at the chart and saying the conditions are right for a move down, just not as good as they could be. Huge support level coming in. Okay, there's your runner stop. This is a stop not on Sniper. This is, well, it is on Sniper, but the new version. So don't think this is the stop for this short. It obviously isn't. Melting through 7,400 can absolutely drop to 73, 77 in a hurry here. So be aware of that. This is the key support. If they recapture 74.02 again here, they can run this back up very, very strongly. But 74.02 has been utilized many, many times over the last few days, so it's becoming very weak support now. So we'll see how they react here. But this is a huge level that they're breaking through right now. I would expect a little bit of challenge here, which you're seeing a little bit of bounce. That's why the runner stop on this one. So this trade, we only had 10. You only get 10% of that move. So you got three. You realized 3 points in percentage basis. I know that doesn't sound like a lot, but it is in the percentage of the trade. But your actual last piece got like 50 or 80 points on that one contract, which is usually what I have there. So in the percentage of the overall trade, it only says it realizes 3 points. So 12 points realized overall on that trade, and virtually no heat taken whatsoever. Like I said, key time here, 75 or 74.02 is big support. Breaking it will lead to spread this out. So breaking it and holding it, I should say, they've broken it. Breaking it and holding it will lead to quick selling. Probably going to see well, we'll see. We'll see. A back test of the after hours low would be pretty normal here. 77.36.66 or 74.10, which they just tagged and rejected. We'll see if they can now push down. So what they did is they broke the after hours low, broke this support, came back because the support technically held for a minute, went back to the after hours low to see if it was really going to hold for the downside push, right? So you break a level, come back, test it, and if it gets through, then you're likely going to be squeezing up. If they hold and push down and break this low, then it's look out below. All price action things. ADD rising. Yeah, you're going to get some of that, but yes, it is rising. I do still believe they can come back all the way to the highs today, so I would not be shocked to see them hold here and squeeze or hold lower and squeeze today. The NASDAQ did catch up. It's now minus 0.2%. So I said that usually resolves in a NASDAQ catch up to the downside. That's what we saw. So now they're kind of back trading normal again with each other. So a squeeze here would not be shocking. Semis are green. Sunny points out that they might be falling, but they are green. Dow Jones transports are green. Banks red. So you're not, and RTY is red, but rising a little bit. So you are seeing a little bit of recovery, and they got back through 74.10. So interesting here for the um, for the Bears. They're going to have to really start to press on the gas if they're going to take this down. Otherwise, they risk getting squeezed back pretty strongly. What did I fill on? Oh. Now the Bears are going to be in a little bit of trouble. Um, they've successfully recaptured 7402. 7400 basically is what we're going to call it. They got below it, recaptured it, and held. Didn't even come back to test it. So this can turn into a pretty solid squeeze up. Um, just depending on how far they want to take it back to the upside. It doesn't have to go all the way to the highs. You got support or resistance at 13, which they're getting through now. You have resistance at 22, 28, and 35. Those are the next levels up. Sniper's firing another short here, so we'll see if it hold well. Okay, so when you guys get alerts, this is a good kind of training right here live on the spot. When you guys get alerts and Sniper does what it just did, that alert's going to come through. So you saw it pop up on the screen and go away because it's forming the right conditions for a short. So when those, as soon as those conditions hit, it gives you the short alert to let you try to get in and have the trade. However, if those conditions go away, then that box goes away on the screen, and you are the conditions just stopped being there. It's like a tornado warning. It's there for a minute, and then if the weather conditions change, it gets removed. So when you get an alert and you go to the chart and it's not there, that's why. That's what's happening. So it was about to fire a short. The conditions did not hold, and once they change, the um, trade goes away. So that's part of the repainting problem is you get alerts, and then when you go to the chart, you're like, hey, what's going on here? That's why that is. Most traded zone here on the ES and SPY. If they can get through that with some gusto, they still got to get through the 8 at 737.24 and VWAP to really change things for the better. But this is not a great sign for the bears overall. Nasdaq though looks a little better for the bears. It's trying to push back down. We'll see if it can actually do that. Um, it kind of had a strong green bar followed by a fairly decent red bar. We'll see if it's able to keep the pressure to the downside or not. If the Nasdaq goes down, the ES will come with it. ES is still putting pressure on this most traded zone though, and if they get through that, they're going to be able to. Well, there they go. So now they're going to test the 8 and VWAP here. That will be a tough level to get through. If they get through that, then we would look for them to continue. Otherwise, they can fail here pretty epically. So it's going to be a case of who wins this battle right here. And if it's the Bulls, we're looking at 79.50 again, or 74.50 again. If it's the Bears, we're looking at 73.77 or lower. And really, for me, and looking at all the charts here, it's going to be the Nasdaq that decides it. The Nasdaq is in the middle of battling for. We can look real quick, actually. Let's just take this over to the Qs. So you've got this big sell bar, big buy bar, big sell bar, and it's kind of in the middle of this battle. And whoever wins this battle is going to if they get back above this high, then look out above. If they break probably this low at 29,152, then it's look out below. Or at least a test of these lows. Right now, we're in no jeopardy of getting a trade, so we are. We'll watch the Nasdaq for a minute and see how we do over there or how it's doing. Well, there's the break of that low, so they can start to try to accelerate here, unless they're going to trap. ADD is rising again, so that is not a great sign for the bull or bears. ES is trying to squeeze, not a great sign for the bears. Has a strong close on that 1 minute bar. ES is in a much better overall position right now than the Nasdaq. So very often the Nasdaq will play catch up in these. So it played catch up to the downside. Now we would look for it to play catch up to the upside. In theory, the ES should be targeting at least 22, 74.22. And then after that, we'll see if they get through that. If they get through that, then 74.28, then 74.35, and then 74.50. Yeah, this is struggling to get down here. I would look for this to fail and go back higher, especially with the ES going higher. You want to see selling absolutely crush. Doesn't mean they won't crush and can't come down and do it, but you usually want to see selling come down and really take hold. Um, and when you see it kind of bouncing off of the zone like this and can't get through, one of two things is going to happen. You're either going to see a very, very, very fast flash down where heavy selling comes in, or more likely than that, you're going to see them squeeze it back higher. Yes, working its way back up towards 22 here. They do have VWAP at 24, so that'll be a little bit of resistance. But in general, I'm not saying when they go to 28, it's got to be in a straight line. I'm saying that they're not going to break down and come down lower. Um, what I mean by that is they can do anything like this, still get to where they're going, but they shouldn't break this low here. They keep trying to push down, but it keeps getting bought. So, like I said, you're either going to see a wave of selling that just completely overwhelms here, or you're just going to see them grind higher. And more often than not, it's grind higher. This is a selling trap. All the sellers see this keep moving down and they're like, yeah, I want to get in. This is going to break down. Here we go, here we go, here we go. And then they're up here all of a sudden and they're out of money. More often than not. Not always. Not always. Certainly not always. But again, we play probabilities. And so when you understand the probabilities of what happens in just general market action, you can be a lot better at managing your trades and understanding them and saying, I can withstand a little bit of downside here and maybe set my stop down a little lower below this body of this candle if you're depending on how wide you want to trade. Um, because if you're able to withstand these selling traps here that stop out the buyers and increase the sellers' participation, then you can ride, squeezes back to the upside. Yes, it's trying to break out over this high. This set of highs right here. So you can see over here, it's only the 1 minute chart, so it shouldn't be too crazy. But right here is a little bit of resistance. This bar right here will be a lot of resistance, 74.22 basically. That's our next target higher for ES. We'll see if they can get there. NASDAQ is all over the place. Crazy. You don't see these markets oppose each other very often, um, where ES is grinding higher and NASDAQ is trying to grind lower and flat. They will eventually recalibrate, depending on who wins this battle. What I mean by that is either the NASDAQ's going to squeeze really hard to the upside or ES is going to get sold hard. But I mean, even there, the NASDAQ dropped, 20 points pretty quickly, and ES is still trying to hold that upper level. Oh, there it goes. You're going to need to see ES really collapse here if they're going to go down. And right now, ES is in a um, pattern that should take them up to 22. So I just think the NASDAQ might just have lower to go where ES holds this low. 73.99, obviously the low of the day here, um, will be key, but ES just isn't having this selling that the NASDAQ is giving. I mean, this bar right here is now negative 40, 50 points almost, and ES is chopping and ultimately staying green. SMH has turned red. That is probably weighing heavy on the NASDAQ. Let's see what the Mag 7's doing. NVIDIA green, Meta green, Microsoft red, Netflix red, Amazon flat, Tesla green, Apple flat. I mean, they're slightly green. Google green. So you are seeing AMD's coming down pretty hard. Semis are red now. They're green now. They're basically flat. So it's kind of this battle of the ES and um, the market. I mean, RTY has recovered some. It was down much more. It's recovered half of its losses. ADD is rising. I think this is a squeeze higher. I'd be pretty shocked if they broke down actually. I never really use the word shocked, and I shouldn't use it here. I wouldn't be shocked if they broke down. This market is due for a breakdown. But given the market dynamics right now, I would say that I'd be more likely looking for the market to squeeze. NQ just not having it yet, though. Everything's getting sold off the after hours low. 29 170 is a heavily traded zone on NQ, so it's going to be tough for them to get through that. That's going to be really where they're going to continue to run into walls. Big slowdown in selling here, though. So when you see sell-offs, you want to see selling. You saw selling, big buy, selling. Eh, eh, eh. Bars are getting weaker. Lots of wicks down here at the bottom. Does not look like they want to sell this. If the NQ can sustain, 29,250 could be a target coming in, which is going to be right here. 245, I guess, 250. If they can sustain above 170 here and kind of start to get momentum moving in the upward direction. ES moving toward 22 now. Did they get there? Yeah, they got there, it looks like. Maybe not. They got to 2175. So ES basically hit 22. I'm not going to hold them to that and be like, oh, you didn't get there. So if they can get back through 22 on the ES and then 24 because of VWAP, but 22 really is the number. If they get back through that, then we would expect them to continue to hold this low and move up to 28. If they get through that, then 35, then 50. So those are your level to level plays there. Now you could, and I guess, potentially see selling because ES did fulfill its target at 22, right? So we were looking for ES to hit 22. It basically did. I'd like to see the actual number get hit personally, but that is, I would call it fulfilled. Little rejection off of this high is perfectly normal. They made this high and sold off of it pretty strongly in the pre-market, or at the open, I should say. So basically, they're trying to get back above the opening print and hold, and that would be pretty. Where actually the opening print was right here. So they're trying to get back to the opening print, which was, what was the open on this? 74.29. That makes sense. 28 was the resistance area. They've been putting pressure on this 8. They got to it here, basically. Got to it here, got above it here and couldn't hold. Got to it again now. So they got this bar right now to see if they can kind of flash through this. If they do, then they're on their way back up to 29,220. There's ES at 22. Okay, so ES has now hit 22. It fulfilled its target. We'll see if they can get through that. If they get through that, then they're on their way to 28. NQ looks like it's trying to push here, so we could see a VWAP retest on NQ for sure. Like I noticed a lot on Wednesdays here. We get on YouTube. We usually get range bound days that ends close to the market open. Yeah, I mean Wednesdays have just been brutally bad for our particular style of trading. It just has, I mean, overall, the last month hasn't been great just because, again, it's a straight up market. It's not that it's been bad. We just haven't had any trades. We probably won't get one again today on Pivot Point Pro because of the chop of the market and the just overwhelming bullish behavior keeps it from being able to find reversals because most of it is straight up. So the last month has been particularly rough as far as that goes. But in general, yeah, it's Wednesdays have been stupid. It's the Wednesday curse. Ever since I moved it to Wednesdays, because I moved it from Tuesdays because Tuesdays were stupid, and then when I moved it, Tuesdays were okay, and Wednesdays became whatever. So it is what it is. So this is a key time. Like I said, ES hit 22. Um, the Nasdaq hasn't really been pushing, but it hasn't been selling either. It's just kind of been holding. So ES has fulfilled its target, its minimum target that you would expect given the break of 13. So now the question is, are we going to hold and push up to 28 on the ES? And if so, will the Nasdaq follow? Um, so it's Nasdaq has been. Here's what I would say. More often than not, when you see, because you could argue, I argued this is weak selling. You could argue it's also weak buying. But more often than not, these types of situations lead to squeezes up because that's how buying works. Buying works, set some traps, break some lows, make it look scary, hold, 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 and then when you've got full seller participation, rip them back up in the other direction, like this. More often than not, selling occurs like this, where you just get bar down, bar down, bar down, bar down, bar down. You just get Cliffords all day. If you don't know what Cliffords are, they're the big red bar. Um, we get those from time to time, but not recently. Recently, it's all been all green, all jolly green giants. Um, but maybe who knows? Maybe today's the return of the Cliffords. But kind of a key time. Both markets now back at their most traded zones after ES spiked up and kind of got above this high right here and failed. So this could turn into a failed breakout and then break down really strongly. We were looking for 22. They hit 22, and remember, once your targets are hit, um, that is the time to start to be cautious. You should always take profit off at your targets and then let the rest ride out to your stop or your next target. If um, if ES gets back up to 22 here, then I would say that 28 is a likely target. Remember, we talked about we have a target of 22. They get up to it, they break down from it, but they hold the prior low, which is this low. They come back to that target. That tells you that price wants to be up here and is very likely going to press to the next target. Again, that doesn't have to do it exactly as I do it. They can do this, then go up, but this tells you price wants to be higher. And you can see the Nasdaq's following along now. So Nasdaq, we're looking for likely these highs right here at 221 as their target, and then you have a bunch of resistance above that, and we'll see what happens there. Remember, guys, this is important. We've talked through a lot. We haven't traded anything. We've talked through a lot, and I've given you a lot of keys to the kingdom stuff, like how to trade markets effectively. Don't have a bias on what you think the market's going to do. When they start to break down and the ADD is down around 1,000 and they look like they're going to have a trend day down, it's okay to say that's the more probable path. But when conditions change, and by the way, this should just be your opinion on everything in life. Anyway, that's another topic. When conditions change your opinion quickly. Quickly. Get out of losing trades, spin to the other side, and look for the setups. I gave you 22. I told you if they got through that and back to it, we're going to 28. They're 2 points away from that right now. I gave you that the NASDAQ was very likely not selling. I told you that the NASDAQ would catch up to the downside when they were going down. All of those things are very highly probable events that even if you aren't getting it on the indicator, you can understand price action. Understanding price action is the number one thing you can do for your life, literally your life. Because if you know it backwards and forwards, you can trade markets effectively. Here we are at 28. All right, if they get through 28, the high is at 35. Not the high, but this high right here. 35 is the next target. They are likely to pull back here, by the way, a little bit. This is a big selling bar on top of NASDAQ hitting resistance. They don't have to. They can squeeze right through, but the probability says they should reject here a little bit on the next bar. Again, a little bit doesn't mean this. It means they can just come back like to this level here and then back up, but I would look for just a little bit of red here. And if they get back through 28, then they're on their way to 35 and then 50. And then who knows after that? Well, I know, but who knows if they're going to break through 50? Ooh, they're in full-on squeeze mode. No pullback off of VWAP. That tells you they're in strength. Well, here comes 35 then. There you go. Okay. If you don't do anything else, take notes on price action. It is incredibly important to fully understand it because it means more to you and how the market works. Actually works. That's a key thing to understand. It's how the market actually works. So that you can trade it profitably. Okay, so they gave you a different kind of rejection. So the market can do a few different things, right? Let me take these levels off here real quick so I got some room. Not like that, though. Let's do it like this. Come on. Turned it off, right? Yeah. Okay, there it goes. So you have your line that you're looking at. This is your support or resistance line. The market can do three things to that line. It can tag it perfectly and reject. It can come through it and reject. And it can come up short of it and reject. Now, this one and this one can produce usually pretty good reversals if it's the right time for it and you get the right setup. This one usually tells you that they are going to go past this line. So usually if they get close to a major area of support or resistance and they pull off of it, that tells you, and that might mean they come all the way down here before they come back, but when they come back, they're not just coming back to get right here and not get through this resistance. They're going to get through it. Now, that doesn't mean, again, that they have to even go crazy to the upside and do this. They can just get above it, then run another trap. which is why we look for a certain type of move. We look for tag of the number in one way or the other. So this one does not qualify. Tag of the number, pull back below that number one way or the other, and then get back to that number. That tells you that the market wants to be there and wants to continue. This tells you it wants to be there, but it's probably going to come back and then get through. And then you just run the same pattern here. Now on this one, you may have a different kind of acceptance where they get through and then they just keep going. And that one you may have to just get in if they get a certain amount above. For the ES, I usually like to look at like 3 to 5 points and hold it for a while, not just spike up there and go back down. And then you can look for that. But all they're doing is trapping. So they come here and they reject because they want sellers on board, and then they come back to the level, and then they may run other traps. They don't have to just go back up from here. So what you have to understand is when these patterns play out that I just drew, this is your key level to the bottom. This is your key level to the top. So as long as they're above this low, whatever low that is, so they had to come in and make a low, then they got back to this level, pulled off of it, and then got back to it. Now, as long as they hold this low, which should happen most of the time, we're looking at the next resistance higher. We're not looking necessarily for this. This, and on the ES, this can be 8 points, and 8 points on the ES, if you're trading 6 to 8 contracts, is a gold mine, just a gold mine. And you just do it over and over again. And you just look for major levels. So there's 3 types of major levels. There's obviously daily highs and daily lows, weekly highs, weekly lows, closes, daily closes. Those are important levels. And then there's shelves. 77 was a shelf. 63 was a close to the downside. So 73, 63, 73, 77 numbers we were looking for. Those are critical levels. Here, they gave you a blow through the number and then a pullback below it. I said they'd probably pull back below VWAP. They did after they blew through it, right? So they didn't give you the standard pullback. They gave you the secondary pullback where they went above it, then came below it, and now they're looking to come back to it. Those are very, very important principles to understand in trading. Now, this is bull market trading that I'm giving you right now. When we're in a bear market, it works exactly the opposite. They come up and they make a high. They come back down and get through a resistance, or a support, I should say, come back up above that support. And then as soon as they come back to that support, this high should hold, and you'd be looking for the next level down. Same concept, just in reverse, right? And that's when we're in corrections and things like that. You want to look at the opposite way of trading this. So when you're in a bull market, you want to look for bull moves. When you're in a bear market, you want to look for bear moves. It doesn't mean you can't get bear moves in a bull market. You get them all the time. But the most common and best way to trade price action in a bull market is bullish trades. When I say bear market, I don't mean like true 20% down, and that's a stupid definition of a bear market, by the way. Bear market, I mean a market that is in a current downtrend. As long as the downtrend is continuing, you can take failed breakout trades. As long as the uptrend is continuing, you can take failed breakdown trades. They're very powerful. Hit that thumbs up and we'll get a trade. Heck yeah. Do it, Will. Hit that thumbs up for me. Seriously, if you like the stuff that I'm putting out, guys, I know we haven't had a ton of trades today. Really. I don't trade Sniper because while I'm doing this, it's just too much to have all the trades going on at once and communicate with you guys and do everything. I trade Pivot Point Pro because they're slower and easier. Snipers on I trade those on futures. And so while I'm doing this, trading futures is very difficult because they can wipe you out so fast. I need time to set my stops and get everything done, and I don't have the hotkeys like I do with Thinkorswim. So I don't trade those. So at any rate, we haven't had a lot of trades, but I've tried to give you guys information to help you trade. and hope you understand the market. And if you do like it, hit that subscribe button, hit that like button, hit that share button, all of it. I've been trading for 5 years now. I learned a lot from many great traders. Caught this channel a year ago, and I have to say your explanations on price action have been the best. Oh, wow. Thank you very much. I appreciate that, King of the Ring. Are you a fighter? That's a name that sounds like you're a fighter. Can you do a video on how to trade futures? Be more specific. What do you mean? Like how the price works, or the basics of it, or liquidation, leverage? You'll have to be a little more specific on what you want for that. I know I'm still on NQ because SPY is not trading. Um, oops, I switched the wrong one to SPY. SPY's giving us a sell warning here. That's interesting. Is my chart set up correctly? It should not have a sell warning. Oh, I see. So NQ has not fully gotten where it needs to get to for us to get a sell. SPY could, on its own chart, in the background, be putting in a sell, but it won't print on here until all three charts are on the same wavelength. Coming back up to 30, by the way, should be hitting 35. Got too many words on here. Get off the screen. 35 is this peak right here, so they're going to come up. They'll have they may or may not have a little bit of trouble here. It's only a 1 minute bar, so we'll see. But this little area right here could be a little bit of chop and resistance, but they've already been there once, so I would assume they're going to get through on the first or on the next try. As I say that, and they turn down right off of it. There they go. Yeah, I would assume they're going to try to get through on the first attempt here, and then come up here and get 35 and fail a little bit off of that. And then this 35 will be the next major zone. This is the area you would expect. So if you're looking at corrective depth theory, let's say our man Sean was right, and this is trying to make a 5-wave down move. I don't agree with that personally, but let's just say it is. Corrective depth theory tells us that if this is 3 of 3, 4 of 3, and 5 of 3, then wave 4 can come up and should very often come up to the equal height or around the equal height of the last wave 4, and then you get your next move down. Again, I don't think of this as 5 down at all personally, but that's corrective depth theory, and this high becomes big because it could also be, I'd have to look at it, a zone of like the 50% retrace roughly off the high, I'm guessing. So if we go high to low, it's actually the 618 perfectly. So coming right into the 618, and this high is corrective depth theory. So then you could call this a more likely an A, B, and then look for a C down like that. So 35 will be a key level. If they get through that, we're going back to 50 most likely. If they don't get through that, then we could see some selling. Given this market, I would not be shocked to see him run right back up to 50 though. Especially since in the overnight they got within 50 cents of making a new high. That just seems odd to me. I said at the top of the show that, or top of the broadcast, that they would probably make a new high, whether it was today or tomorrow or whatever. Used to box, never changed the name for 20 years. Don't matter. You can go beat up Jake Paul, fake boxer extraordinaire. I love that he got in the ring with a real fighter and got his jaw broke. Can't be mad at him. The man has turned himself into a multimillionaire with all of his antics. But I was, I was, I'm pretty confident Tyson took a dive in that fight. Mm, you know, uh, me personally. So um, I watched him train, and he didn't look like Mike of 20, but he didn't look like the fighter in that ring either. And he was moving pretty fast and punching pretty hard. And in that fight, he just covered up and let him punch him in the arms a few times, and then they called it a fight. And I think that that was a money grab completely. So I'm glad that he got in with a real fighter who broke his jaw. I'm still sad Customata died. I think Mike would have been one of the craziest boxers of all time if he didn't get involved with the wrong people. And now boxing is just a terrible sport. They have they have bastardized it and uh, made it so just unwatchable. And they're colluding so much on it, and I just don't think it's even a viable sport anymore, except for the Olympics. If possible, can you just give quick advice on reading ADD? So many times it goes totally opposite real market move. Obviously, not a standalone use. No, gosh, no. ADD is just a more of a guide. Um, so if the market is ripping higher and ADD is negative 1,000 and ripping lower, I'm very skeptical of that move up, and I'm looking for opportunities to short. In conjunction with that, I am watching the ADD to make sure it doesn't stabilize, because the ADD can move wildly at the open because there's so many quick moves, and then everything settles down and it starts to go back up or go back down, go in the opposite direction, and it settles down as well. So what I'm looking for is extreme divergence on the ADD, and um, usually that is, so if you've got a bull open, so they've gapped up and they're like here, and the ADD opens, let's say at 1200 positive, and the market continues to do this, and the ADD does this, I'm looking for the next key level up to see what happens. Because if the ADD is doing this, well, I'm looking for three things. Let me clarify that because it's important. I'm looking for the Mag 7 to start to weaken if they're strong, or not be super strong, one or the other. We may get a sell signal. This bar's got to close first. So I'm looking for the Mag 7 to start weakening. That is one key factor. I'm looking for the ADD to be divergent, and then I'm looking for the next key level to see what happens. And if I get short, the next thing I'm watching is the ADD because I don't want to see the ADD start doing this. Because then what has happened is they had plenty of bull momentum. They got to a stabilizing point, and now some other stocks are switching back to bullish. So all you had was a quick. What you get a lot of times is they move down below yesterday's low, they trap it, and then they squeeze. And so you want to make sure that's not happening. But it is a first indication of potential reversals. And then you just watch it in conjunction with, again, the Mag 7's got to be on your side. If you are opposite the Mag 7, you are likely on the wrong side of the market for that day. And that's not always, so let me be clear about that. If the Mags, let's see what we got today. We've got red, green, and then you got kind of a mixed Mag 7, and you kind of have a mixed market so far. If this was all red up here and the Mag 7 was all green, which we've seen lots of times, you're going to have a real hard time selling off the market because they make up so much of the market cap that if they're green and not weakening, they are not going down. The market is not going to sell off. Now the RTY might. You might see the RTY like it is now, negative 12. The RTY might be able to sell off a little bit, but the ES and the NQ are not going anywhere if the Mag 7 isn't going anywhere. If the Mag 7 is red and RTY and ES and NQ are green, but the Mag 7 is very red, you're not going to run away train that market unless the Mag 7 starts to strengthen. So you have to, the three things I look at a few things for market cooperation. The first thing is RTY on board today is no, and you have a mixed Mag 7, so probably choppy today, which it is. Um, but the Mag 7 I would say is mostly green. I look at SMH, Dow Jones Transports, and banks. These two are red. That's a bad sign for markets. This is strongly green. That's a good sign for markets. So you have a lot of mixed signals, which means probably a choppy day. But your stronger signals, your SMH, your NQ, and your NVIDIA, those are mostly green. Your Google, and you have one solidly red Mag 7. The other two reds are kind of weakly red. So I would say choppy to bullish, which is what we've got. If they were all red, then I would say a little more bearish. If they were all green, bullish, and so on. So I look at those things in conjunction with the ADD. And then one other thing you can look for on the ADD is the zero line. So a lot of times you'll get a positive 1,000 reading. They'll come back down to zero or just below, and then the market will stabilize right around zero or even, and then it'll start to go bullish again. So all they did was pull back, test the waters, and then they're going to start to run again. So the zero line, if they break through that without any support, that's kind of an interesting spot. But that's how I use the ADD, which was not brief at all. But there's also nothing going on, so. What are we at here? Are we closing this bar in 7 seconds? We are. Okay. It's possible to get a sell now, so I'm going to go ahead and get that set up here. Where'd that go? Right there. 738 would be where we're looking for our strike still. Just as an FYI here. Wait, what was? Oh, options prices is the other thing. So right now, options prices are about $1 at the money. That's pretty standard for a pretty standard day, meaning a day that might go up 1/4% or 0.5%, might go down 1/4% or 0.5%, but generally is going to be up to flat. Or very bullish on, it leans more bullish when options prices are lower, much more bullish. So that's the other thing you can look at. If options prices aren't elevated, then the market isn't scared. And if the market's not scared, they're going to get caught off sides. If they're selling, it's going to catch them off sides. Those are the days where you really get the selling reversals. If they do go because the market makers are caught off sides. In other words, they have $1 options and all of a sudden they have a 40-point sell in the ES out of nowhere and they have to really, really adjust for the volatility. So your options prices escalate quickly. They get off sides on their own options trades. They have to buy or sell futures, and that's when you get a lot of rapid selling because they're not properly priced. Nobody's expecting it. But in general, the higher probability says when options prices are like this, we are going to grind sideways to up. I will say that um, when you get a very key level, 7402 is the key level. I call it 7400 because I like round numbers, but 7402 is the quote unquote technical number. 7400 is your support. They trapped it again today. They hit 73.99, came back above it, ran it right back up. The day, and it may be today, it might be today, the day that they do that and don't produce a new high off of 7400, and then they come back to 7400 and break, that is a prime opportunity for a sell. So if they come back down here and they can't hold after this last ditch bounce that didn't get to the highs, you still may get something like this, but I would start to look for, once they break, waterfall effect. Usually 77 would be the next target, but they've already been there. 63 would be the after that. They've already been there. So you have a chance for 40 points of downside really quickly. I would prefer we go hit 35 before we get any kind of sell signal personally, but that doesn't mean we can't get a sell down to, 22 or even 13 or something. But I would prefer they hit this target first because I think it's likely they do. And remember that, so when you get a trade down here, you should have your stop set below this low. And then you hit your first target at 13, you take profit. And then you hit your second target at 22, you take profit. And then you can have a runner down here that's still below this low. You should have, let's say you had 8 contracts down here. That's what I trade. And you have 1 contract left. Well, now I can leave my runner all the way down here. And even if they come down and stop me, 7 of my contracts made 22 points. And 1 contract made minus 22 points or whatever. Actually, it's going to be technically minus like 3 points. So you're going to make a lot of money. And it allows you to stay in the game so you don't have FOMO, catch 35, and so on. So once they hit 35, I can move my runner up to 13. So technically, they can still come all the way down here and come back up and hit 35 and still be in a perfectly bullish formation. And if I have my runner set right, I can capture all of that and never have any stress because I've already taken a ton of profit. So if it comes down and stops me out, so be it. We'll look for another trade. If it doesn't and it keeps rolling, I just get to keep banking money. And you may say, well, it's only 1 contract. Yeah, well, 20 points on 1 contract is $1,000. So every time it goes up another 20 points, I make another $1,000. And if you took your second profit at 22, they are up 9 points off of that right now. And if they keep going to 50, that would be another, 1,000. $1,500. So And all I had to do was sit here with zero stress, zero worry, and then watch money come in or not come in. I mean, if it stops me out, so be it. I still got a ton of money stacked already. So you have to, if you manage your trades on these properly, you can just have a runner that you have zero stress on, which is why we set up Sniper the new way to do that, so that you can really capture as much of the move as possible. Do you ever integrate harmonics with EWs? Been noticing some patterns hitting on different time frames. No, I do not. I am very, very much a less is more kind of person. I know it says I have 14 indicators up here, but that's because like 7 of them are different Squeeze Sniper versions. Most of them are moving averages and things that just sit on the chart, but I am very much a less is more person. So I'll take price action, a few moving averages, VWAP, and my 2 indicators, and be perfectly fine to trade. If you're trying to balance out 500 things, you're going to be confused because they're going to overlap. They're going to look different. One's going to be bullish, one's going to be bearish. You're going to be, I don't know, this one's not on board. That's why I created indicators to do all that for me and figure out the probabilities and then tell me where we're at exactly so I don't have to think about it. Because if you're making the decision, you're human, you're going to let emotion take hold. You're going to say, oh my God, it's moving too fast. I can't buy here. It's going down too fast. And then you sit there and then it reverses and goes back up to the highs and you're like, oh, dang. And did we hit 35? We got real close. 34. 34 and a quarter. Within a point, by the way, is for me, a technical fulfillment. I still like to see the number hit, though. I still want to see 35 on the chart. I'm a purist. Now, for profit taking, maybe not so much, but for just pattern theory and my target recognition and things like that, I like it to hit. If you're new here, guys, thanks for being here. I'm sorry we don't have a whole lot of action for you, but you hit subscribe and you can come back to the closing calls. We go over the markets every day, Monday through Thursday, 3:55. We do these trading days every Wednesday at 9 a.m. I was a little late today, sorry guys. 9 a.m. on that, and then you can join my rooms, investwithjacob.com. You can get a 1-week free trial, so you can get in there for 5 trading days, see exactly what we do, what trades we get, what we don't, what I say. The afternoon videos are an hour long, and I think just the hour afternoon video is worth the entire price of the room. It's only $49, and we have lots of single trades that would pay for your whole year membership. So check it out, see what we're all about. If you like it, stay and be part of the group and be part of a winning team where somebody actually respects and cares about your outcomes. And if you don't, that's no problem. It's not for everyone. You can also try the indicators, investwithjacob.com. You'll find Pivot Point Pro. And in the link below this description, you'll find a discounted Squeeze Sniper because it's not on its full version yet. It's still beta. So if you want to check that out, the price will go up once it's finally done, fully baked, if you will, and you can get in early on that. If not, just please hit that like and subscribe button. Look at that. I sound like an advertiser. I should be on radio. Been watching you on and off for a year now, and you haven't pulled the trigger on Pivot Point Pro. Looking for weekly setups, long-term holds, and concentrated all-time high market conditions. Thoughts on trying now? I am not sure what you mean, R. Smith, on not pulling the trigger on Pivot Point Pro. We trade Pivot Point Pro every day in the daily, and I know you said weekly there. We traded it just a couple of weeks ago. We got out of our weekly trade, which we could have stayed in, but that is my personal buying on Pivot Point Pro because we're near top of markets. We bought the last one and made a lot of money on it. We got in like $11 and sold for 33, I think. Could we have made more? Yeah, we could have, but triple my money I was okay with given the rising risk of the market. Um, and that, that's just my personal preference. I just trade what my risk tolerance um, allows. So if anybody decided that they were going to stay in the weekly long, then they killed it. You believe you want to pull the trigger on buying it? You want to buy the actual indicator? Is that what you're saying? I'm sorry, I might be a little bit confused. It's got a 30-day money back guarantee, so if you do want to buy it, I would say then do it and try it for 30 days. And if you don't like it, I understand, no problem. Yeah, I would just tell you go ahead and buy it. Of course I would. I get it, but my point is you get a 30-day money back guarantee, and if you don't like it, that's okay. It's not, again, not for everybody. But if you're talking about the weekly and being near the top of charts, that's a good thing. And it was a good thing when we were low. It's a good thing at all times. If you're not day trading, no problem. One, there's a million things to trade. So let's just go to the weekly chart real quick. We could get a sell up here, but we'll go quick. So if we go to the weekly, and we go to Pivot Point Pro, you got a buy right here on the weekly, which came in at 68.59. 68.59, and we are currently at 74.32, so that one was pretty good. You had a sell right here. You had one right here and right here, right near exactly the top of the market, and they went from 7,000 down to 6,400. So being at the top of the market's good. Being at the bottom of the market's good. And if we're not at either of those and you're just wondering what you can do, you can go over and look at, say, Meta. Meta had a buy right here. You absolutely ripped it up. Now they're coming back down, but I hope you took profit here. This was a 10% move up this week. So if you're not taking profit there, I don't know what you're waiting for. Not, you don't have to close your whole position, but you should have taken some profit. Or you could have gone over here to Meta and the sell right here. I mean, they dropped. Let me turn off Sniper here. You have the sell right here that dropped. I don't know how many points this is. 755 down to all the way down to 590, 580. So you had that one. This buy didn't work out. This buy did. You had, like I said, 10%, and then they're back down where they are. Oh no, this one was 659 to 744, so almost 100 points up on that one. You should have taken profit somewhere up here, and then you would have got stopped out, but you would have made money. You got a buy down here that worked out so far. So I mean, it's Netflix at the top was a nasty one. The sell right here on Netflix, you always get in at the bottom on sells because you got to wait for the week to close. You got in at 120.90, and they took it all the way down to here, 70, 75, so almost a 50% move down. You got a buy right here that went crazy. Now this one you may or may not have made money because you got in at 96. They took it up to 108. That's a 10% move. So that you probably should have taken some profit on this one at some point up here and then got stopped out likely on the sell. By the way, Netflix has a sell on it if you want to entertain that. Amazon at the lows was incredible. They got a buy down here at 209. They took it up to 278. Does every trade work out? No, of course not. We all know that. We all know that it does not work out. By the way, 35 hit on the ES. But I mean, you just get so many monster trades that the losing trades don't even matter, right? Like this sell probably didn't work out. You may or may not have got a little bit of profit on it, but probably not. But then once you got the buy, you should have got out of this sell. So you shouldn't have lost much because the buy came in right at the sell's entry. So you're going to lose some time value, but otherwise you should have had a small loser, and then the winner just makes up so much ground on it that Google. How about this buy right here at 341? They took it up to over 400, so that's 60 points. That's 120% move. And then Google also had that sell didn't work out. That sell didn't work out. That sell didn't work out. But this buy down here somewhere, right here, this buy, 165. You didn't actually get a sell signal until it was over 255. So yeah, I mean those sells didn't work out. But if you use the weekly properly, you got long here, relonged at 253, and you got up to 281. So another 10% move there. You got long again here at 299. Up to 321, so another 10% move there. So yeah, I mean it's been and then this sell right here was fine, down to 269. So yeah, I would say get it. It's an incredible tool, an absolutely incredible tool. I think that people look at one trade on a lot of things and say, "Oh, I shouldn't have done it. I shouldn't have got it because that trade didn't win." Yeah, there are trades that don't win. That's a very big part of trading, and the faster you understand it, the better off you'll be at trading. Because you have to understand that if you just took this buy right now and you were still in it, I took profit because I am who I am. That's just what I do. I take profit because you can't go broke taking profit. Um, but I mean, it was a 300% gain, so I was pretty happy with it. Uh, but at 68.54 and you're still in, they are 600 points higher in just 1, 2, 3, 4, 5 weeks. That trade right there, that one trade, not only pays for your indicator for as many years as you want it, it pays for like 25 losing trades. So, I mean, I would say yes, buy it. But I'm not biased. All right, they got through 35, so 50 is the next target. Are you guys learning about price action at all? Hopefully today's a masterclass in it because it was perfect. That we got a chart that we could use for it. It was great. They have done exactly what you would expect. They continue to hit the targets and move, and that's what we want to see. So, if you were wondering what was happening over here when I said this is weak selling and we should be looking to squeeze, they squeezed. Oh, this on the NQ, this is the SPY, but same concept. All right, we may get a sell here, so we're going to be ready for it. I have a 739. I'm going to go up a strike here because they're not expensive, and I want to be as close to the money as possible or in the money because we'll accelerate faster. So I do have a 739 strike if we do get a sell, but I got to be honest, I would have rather seen them sell 35 direct. We'll see if they spike in reverse here, though they spike the high, so maybe we can see them pull back a little bit to reset to make the charge to 50. While we're waiting, let's go see what everybody else is doing. Let's see. Gold today taking a little hit. Silver a little bit bullish. Bitcoin a little bit bearish. This is not a good sign, guys. The 30-year being over 5% now for 2 days, and climbing, by the way, not just over 5%, climbing. I think is it breaking out? Let's see. It's got to be close. Where'd I go? Oh, went over there. Oh, you got the 1 minute chart, not really good for this one. Yeah, that's what I thought. So this is breaking out, and that is a bad sign for markets. That is a bad sign for markets right there. Um, Remember, every time they get it near 5, like right here, they try to destroy it because they don't want it above 5. Above 5 is a bad deal. They got it to 5 here, they brought it back down, they got it to 5, they brought it back down, they got it above 5, they brought it back down, and now they're breaking out. They're making higher highs and higher lows, and that is bad news for the markets. Hi, Jacob. Great commentary and knowledge on price movement in the markets. As a member of your room, do you provide this level of analysis on your calls each time? No, because it's easier just to talk out loud while we're doing it. To type all that out all the time would be a lot, but I do give training during the midday calls, and we go over why price action is what it is, how it works. I answer any questions on it. Matt yesterday asked me how I got the 2 levels I got. We went through how to find levels. So I'll do training on anything, and I'll give you levels during the day um, when I can. But for the most part, we're concentrating on our trades, and then the midday call is where we go through a lot of things. But if you ask for levels, I'm happy to give them to you. I give you the levels at the beginning of the day that are key levels. You get a big write up and stuff. So this is just easier because I'm sitting here, and as it happens, I can be like, oh, there it is. Here's what you get. Right now, the downtime that I have in my room is spent on Sniper and trying to get that code finished because people need it. So I spend a lot of my times away from the charts unless we get an alert or a trade, which we are not getting today. Bull is strong. Nothing affects it these days. Oh, it's going to be affected. Don't you worry about that. This right here is going to affect it. This right here is not a good sign for the market either. Actually, we can move that to the other chart because. All right, we're going to give them a couple bars to give us this sell. If they continue to rip it higher, then we're just going to have to call it because then 50 becomes the target, and we're just not in a very good place to trade. XLF is what I was looking for. This breakdown, should it start to follow through, will be ugly for the markets. You have this AB setup, and if they follow down with this C wave, that is going to be very, very, very bad for the markets. Very bad. Vegemite on toast. Vegemite sandwich, I assume. I don't know. I've never had a Vegemite sandwich, but everyone I've ever heard of that talks about it is says it's terrible. So I don't know what you're. Maybe you mean that's what you mean for bad for the markets because Vegemites are maybe bad for you. I don't know. Anyway, this setup on the banks is not good looking. Pivot Point Pro weekly sells have saved me a lot of money. That's great, Red Dragon. I'm glad to hear that. Very glad to hear that. I'm a Chinese dragon in the zodiac, Chinese zodiac. So there's that, I guess. I'm a Leo dragon. I have all of the traits of gregarious, egotistical, charming, obnoxious, all of it. All the good, all the bad. I have it all. Are you taking this short setup on the ES? If you mean, we need to go over there. Get back on our chart. If you mean Pivot Point Pro, if it gives us one, yes. I assume that's what you're talking about. Why would you do that, chart? That's annoying. What's your price target to the downside? For ES, for today, for um. All right, we should be getting close here to a sell. We're waiting to see a little more weakness in the chart. Rates have been rising for a while. We're sitting at nearly all-time highs. Isn't the market forward-looking? So why isn't the market selling off in this kind of rate environment? Because the rate environment is just now getting to 5. You saw that it's breaking out just now. It has been able to suppress the um, it has been able to suppress the 30-year under 5, and when the 10-year started rising, they suppressed it, but now it's rising again. So it's like putting your finger in the dam and holding back the water and saying, "Okay, we're good," and then another leak pops open. So they only got so many fingers. You got to remember, yes, the market is forward looking, but when bonds start to rise, that's more of a real time thing. And when the bond market starts to say things aren't great, they go up because people are putting their money in safer places. And then the market says, "Hey, why are people going risk off? We should be in risk off too." Uh, or risk on, I should say. Why are people going into a safer place? That must mean risk is coming back into the market, and then the market adjusts. But remember, everything is a macro catalyst. Everything that matters. So the bonds going up today may not matter in today's market. They want to see consistent, not necessarily rising, but holding for sure of that level. Because bonds are going to go up and down a little bit. Everything moves up and down. But if they're starting to break out and go, that means money's coming in. That means risk is rising, and people will want to allocate their money. So I would say that you won't always see things line up in conjunction. One, it would be very easy for the markets to be traded if that was the case. And two, it takes a minute for macro events to be felt through the market. In other words, the market is going to go till the market hits its targets, regardless of its environment. If you look at, I use this as the example all the time. If you've ever seen The Big Short or read about it or understand it, Michael Burry was right, and he was right for 2 years before the market reflected that he was right. And then they were like, when they couldn't hide it anymore, when they couldn't put it on debt sheets and hide it or write it off or do anything else, and they had to do something to figure it out or fix it, that's when it hit the market. So it's like, it's essentially like being arrested, right, for something as simple as a DUI or something as bad as murder. Well, maybe not murder because you probably won't get bail, but getting out on bail, not going to your court case, and being a free man for as long as you can avoid the cops. And then you get pulled over for whatever reason, and then the shit hits the fan. And it's way worse than you thought it was going to be. So the market, in my opinion, is like the man who got arrested. They arrested him in March. The market went down because you got to go to jail for a day, right? The market went down all of March. Then the market got out on bail, and now it's running around spending all its money and driving itself up and having a great time. Market's party mode right now until the market gets found by the police because they skipped all their court dates. So the market is in party mode, but I think it's in a very high risk party mode. That doesn't mean we're done, by the way. Remember, my primary path has a pullback and then higher, and then potentially two pullbacks and higher, just depending on the structure and how things go. But the primary is a shallower pullback and then higher before we hit the final targets. That's more of a structure thing because I'm a purist on those types of things. So it doesn't have to do that, but that's the primary path and the more common path. So just because the market is acting in a way that doesn't reflect what's really happening, that in fact that is the exact criteria of a bubble topping. When the market disconnects from reality, that is when you should be very scared of the market. Warren Buffett says constantly, is a super famous quote, when there's blood in the streets, you should be buying, and when everybody is telling you to buy, you should be getting out of the market. And he's been out of the market for a little over a year now. He has his highest cash holding ever. And Warren's always early. Warren doesn't want to get me. If you want to learn from somebody, learn from a guy who's one of the richest men in the world and did it mostly through investing, that you aren't trying to catch the top or the bottom. I don't want to catch this. I don't want this. And I don't want this. Again, I want this. This is the part I want. I want to catch the hard, strong move that goes up or down that is set to happen here. That's the easy part of the trade. That's when I'm done trading. That's when I'm out of the game. And then I'll wait for this to happen. I have plenty of patience. I don't care about this move. Right? I want the easy moves. And that's what we traded. We traded this move on the way up. We traded all of the move. Well, I say all. We traded off of this low to about right here. And then they kept going. And that's okay. I don't care about that. I made a lot of money. And that's what I care about. And I did it in an environment that I wasn't that worried about. I wasn't too concerned overall with risk. You should always be concerned with risk at some level, but some things are much riskier than others. The market has been a party animal lately. And if you remember the dot-com bubble, we saw this exact kind of thing as well, where these companies that had no earnings, no money, no company for that matter, these dot-coms that were just websites, being driven up to these insane prices and people being made millionaires overnight and then literally made broke overnight. The amount of leverage that was in the market at that time, which is now, by the way, the amount of leverage in the market now is higher than the amount of leverage that was in the market in 2000. The highest leverage that's ever been in the market, which is when liquidations happen, which is when margin calls happen, when banks go out of business. So be very, very afraid when everybody's telling you the market can't go down, when they are just absolutely ramming all the forward price estimates higher, all of the predictions. That's when I am the most afraid of the market. Have you ever seen markets so uber bullish like this? Absolutely. Absolutely. Now, let me be a little bit clear on that. This is a historic move. It's the number one move in history of its kind. So technically no to that exact question. But if you look at right before 2000, right before 2008, right before COVID, right before 2022, you saw all of these things. They are continuing to rip higher here. Can we get a sell? The answer to that is yes. Do I necessarily want one at this time? Not really. And I do have a call in 40 minutes. So with that, what I'm going to do is show Sean here. We're going to go down to one chart. If they give us a sell here, you can take it. There's certainly nothing wrong with that. The reason it's there, the reason the indicator gives you setup or trades is because they're good. But for right now, we're going to go to a different chart. This is the 1 minute chart. We're going to go to the daily chart. Turn everything off so it's not cluttered. And we'll just take a look at some history. So I remember before COVID moving money out of my 401k and in just cash. I just moved it into cash. I didn't put it in anything else. I was looking for a big drop. The ABC setup was there, and we got it. And that was, and everybody said, oh, you knew COVID was coming? No, I knew market structure. I understand market structure and I know where risk is. And again, I'm not afraid to miss a few hundred, sometimes even a few thousand. It's never been a few thousand, but a few hundred points of movement if I know I'm going to get a better price in the future. And do I ever quote unquote know? No, but if I'm very confident that I'm going to get a better price and I'm very confident that risk is high, then I have no worries moving my money out of the market and into something else. That's why we moved to gold 2 years ago. I thought the S&P risk is very high. I still think it's very high. I think it's even higher now. So it was on red alert for me. Now it's on like, I don't know, what's worse than red? Maroon alert. Um, and it was for the most part. We got that April of 25 pullback that was nasty, and that's the low we got to watch. But if you look at the October of, well, this move off of the July or November of 23 was a monster, right? Basically straight up. Now they had a lot more red days in there than they do now. But that's one, but that's not even one of our bubbles. So if we go to COVID right here in 20, actually, no, let's go to 22 first. Where's 21? 21. Is this it? Yeah. This move is very similar to where we're at right now. You got a pretty sharp pullback in September into November or into October almost. And then from October, basically 5th, you went straight up into November 4th. So for 1 month, it was straight up. You got a small pullback, which is what we're looking for now. And then you got another high. And then you got a bigger pullback and another high, which is what we're looking for now. So, okay, we are going to get a trade. I believe we have a trade right now. I'm on the wrong chart. Let's put this back over. Did we get it? Oh, it might have went away. Hold on. Let's see if we get it or not. I think we probably got a sell signal there, but my chart was not on. I have 739 as my strike. If we do get it, let me see if it comes back alive on us. We'll try to take it since we didn't have any trades today, although I'm going to be first to tell you I'm not excited about this trade, but I trade what I get because the indicator is smarter than me. What I mean by that is it's not smarter than me in the sense that me and another person built it. There we go. 93 cents. And our stop is going to be 739. What's called 75. But I built the indicator, but it does not use emotion or anything else when assessing the market. It just assesses the conditions and says we're ready for a trade here. So it's smarter than me in that it's not emotional. That's what I meant. So we will move our stops here down to 739.50 if they hit $1.02. Okay, move your stops to 739.50. Coming into the 8 here, we need at $1.07, we'll move our stops to break even. If we get there, the 8's going to be a tough one though. So we did at least get to move our stops down. Hopefully they can get through the 8. The 8's going to be a tough one to get through when you have momentum like this. But if they do, then we're very likely coming into this down here, which would be very nice. 738.58. Again, because I am an emotional human, I have trouble seeing them breaking down here. But the conditions are right for it. So we'll see if they can follow through or not. Essentially what you want is a press down now because they came to the 8, they bounced it back up to the open, which is normal. That's normal behavior. If they turn it green, that's when you get in trouble because they've held the 8 and they're going to try to bull it out. But this is good. This is good. This is what you want to see. All right. Okay, let's move our stops to 93, so we're break even. Whoops. Oh, I never hit enter on that. Sorry, guys. Um, so we are now break even on the trade, no matter what. And we are looking for $1.10, which we almost had there. We were very close. $1.10, $1.11, $1.12, anywhere in there is fine, depending on what price you got. We got to $1.08, and if they come back down, I may take that just because again, why look a gift horse in the mouth when we're bouncing off of the 8 here, and it looks like they may get us on this bounce. Well, that's okay though. We were able to turn it into a no lose, so they still may take it down. It still may be a trade that works out, but we are stopped out for break even. No harm, no foul. We got to take a shot at it, and the Bulls so far are pressing. So pressing it back up. So we'll see if they can hold here. Like I said, 50 is the next target higher. I do believe 50 will be hit. Again, does that mean it has to go directly? No, it doesn't. But that's all for that trade. No harm, no foul, though. So anyway, the point being, in October, we had a move just like this that went from of 21 right here. If we zoom in on this one just a little bit so we can see it just a little better. So what I'm looking for right now is a small pullback, which you got right here, and then another high, which you got right here, and then the deeper pullback, which is your B, and then this is a terrible structure. I hated it. I guess you could call this 4 and 5. It just was not a good ending structure. It was very confusing for the high to end like that, but it is what it is. So point being, we are looking for a different makeup right now, but a similar structure, an ABC up to complete the high. Now, after that, the market was sold very, very strongly. If we go back to COVID, the lead up to COVID was really incredible. From right here, we were looking for this. So you had your 4-5. And then you had, where are we at here? Where's my A, and then this was a very expanded B wave because you had a very clear A, B, C for this B. Now it was very expanded, but this run right here, we were looking for 3,800 or so as it came. We were looking for it to top to what's the word I'm looking for? Top out right here and turn down right around 3,600, but it kept going. I got out on this bounce and this B wave bounce around 3,600, 3,700, and it kept going up to over 4,000. And I was okay missing those 300 points because I was expecting a very strong pullback, maybe not COVID level, but back toward this zone around 3,500 or even 3,430 was really where we were looking for to come down to. It obviously gave us much better than that, and then back up. So this bullish run was outrageously big. From October 08 to December of 19. Is that 08? No, October of 19, 8th of October, sorry. That run was very strong. That was from 3,500 to 3,800, so a 10% move in a little over a month. And then continued after a little pullback, continued for another 10%. So this was like a 20% move up in no time flat. By February, March, I guess is when it took, or no, February, yeah. So a couple months, 20% move there. Off of this low, back the 18 low crash, off of this low, we were insanely bullish. So it's not uncommon for markets to have big run-ups right before the 18 set up for that crash. You had a very nice bullish run. And then over in 2000, and this is what people don't realize, is when I say the market can drop 60%, they're like that could ever happen. Yeah, I know, right? When has it ever happened? Just because you're 22 years old doesn't mean that the market can't drop. You see, what you have to understand is the market just became popular to people in the late 90s. And what I mean by that isn't that there weren't traders and the stock market wasn't a thing and people didn't invest and blah, blah, blah. What I mean by that is the early 2000s ushered in, obviously, the internet. the internet is an insane tool for trading because there was no day trading unless you were on the stock floor back in the 90s and before. So there was no day trading. There was no people analyzing every tick of the market in that way unless, again, they were on the stock floor. But in 2000, we went from 1750. This is inflated, so we need to be on the SPX actually. In 2000, we went from way back when. So all these people forget that was a 9-year bear market, like a real bear market, not a 1-year pullback or whatever, 8-month pullback. That's not a bear market, by the way. So we go back over here to further. And it didn't get a new high for almost 16 years. So that scared a lot of people. 2000's right here. Okay. So leading into the dot-com bubble, we were at 443 in 94. And in 6 years' time, the market went up to 1600. So it was 4x in 6 years. That means almost once a year it was 100%. Not quite, but 100% gain. A little less than that, like 80% a year or something. But on the move up for the dot-com bubble, from the low in 95, I mean, this move up is from 95 to 2000 is 453 to 1500. So 3x in 5 years. That's an insane move. It's an insane move. And then when the dot-com bubble really hit its height, everybody said, okay, here's the bottom, right? This was 98. From 98, it went from 952 up to 1500, which is 50% gain in basically a year. And then we went on a 9-year bear. So they did not, we had an expanded B wave here, didn't we? Yeah. So we made a slightly higher high right here. We got to 1574. And then in April of 09, we were down at 670. So 1574 to 670 is 900 points of drop, which is 60%. And it did it in less than a year, or a little over a year, sorry. So when you tell me the market can't go down 60%, I can show you that it did it in a year, basically. I don't think it'll, and quite frankly, it took 9 years for it to completely happen, because this was the actual high, this was an A and a B, and this is your C wave down. After that, we didn't get back to 1500 until 2013. So it was a 13-year bear market fully till we regained where we started from. Now, people back here don't remember, people who trade now don't remember this, young people. You might think I'm young, I'm 50. I'm going to be 50 this year. They don't remember this. They don't remember the great financial crisis because internet trading really took off right around 2000. And so the people who are 21 now, they were 4 when this happened. The people who are in their late 20s now, they were 8, 9, and 10. They didn't know that the market worked this way. They just saw the market when they got to be 21, which is over here on this side of it. And on this side of the market, everything goes up and to the right really, really fast until you hit, COVID or 18 or whatever. So they don't believe that real bear markets can happen. Young people don't because they've never seen them. And people didn't trade markets like this until the 2000s because there was no internet investing. So when you have to mail a check into your broker and then your broker has to deposit that check and then you wait 5 more days, can you imagine if you had mailed your broker a check to buy right here and by the time it got cashed, it was up here? Because it took 5 days, it took 3 days in the mail and then 5 days for the bank to deposit the check and then the funds got to be put in and then they got to invest. And so you wanted to buy the pullback and what you actually bought was the top. That's insane. So that's how that worked. And people just had 401ks for the most part. People didn't just have stocks unless it was part of their company program. Like my mom had P&G stocks and things like that as part of her work. So trading has changed completely since back here. It used to be just all buy and hold because there was no, like I said, if you're not on the floor, there's no day trading, there's none of that stuff. That's all stock market stuff. You got to be in New York on the floor. So now you have this whole generation of people who don't remember that we had 13 years of no new highs or no breakouts. That's a big deal. That's a long time. And this bear is going to be bigger than that. A guy told me in yesterday's closing video, you said this nonsense already, stop believing it, or something along those lines. First of all, it's an opinion. So I can be wrong, and I've said that more than once. I'll be wrong again. I've been wrong before. Second of all, being prepared is way better than not. If you fail to prepare, you prepare to fail. Ben Franklin. Third, you tell me this ain't a bubble. I don't know. You go back and look at the history of the market and tell me this ain't insane. Looks insane to me. But that's where we're at. So anyway, we're going to wrap it up there. We had our trade. It didn't work out. I'm aging you. I'm aging myself. I can't believe I'm going to be 50 this year. That's crazy. Every time I think about the 1980s, I think that it's like 30 years ago or 20 years ago. It's 40 years ago. 40 years ago. 74.40 is where my stop is. Pray. You got to pray. You got stopped, I guess. I'm sorry, buddy. We tried. You should have broke even if you followed our rules. If you didn't, that's okay. I get it. I'm not saying you did anything wrong by following your own rules. You should have your own trading plan and understand it. That's you. But hopefully you did okay or didn't do too bad getting stopped out there. At any rate, they're going to go hit 50. That was the next target. I just didn't know if we would get a pullback first. Yeah, it is another day of the bull. They have not made a new high today, but they probably will. Like I said at the open of this call, being 50 cents away from the high was kind of strange to me. That they didn't go get the high overnight. So they're obviously going to come back and try. I think they're going to get it here in the cash market. Then we'll see what happens. This is an interesting dive bomb. So they dove 50 points down for no reason, and now they're going to go back and get it. I know there's a reason, and hopefully it's a micro 4-5, and then we'll see if they push down the rest of the week or anything. But bonds are rising, yields are rising, things are rising, banks are struggling. There's a lot of things out there that still are macro things. They take a while. Like I was talking about in The Big Short, it took 2 years before they had to address the situation. So they can push this stuff out for a while. Everyone has an opinion, just like armpits, but some of them smell. Oh, that's the cleaned up version. So at any rate, there's a gap right here. They're going to come fill that. Is there a gap? It's real close. What was the close of this one? 73, not 739.79, and the low here was 70. Oh, it's a penny. That's not a big one. So they may not get that one. They probably will though. They don't like gaps. All right, guys, we are going to wrap it up there. Another Wednesday of just market grinding higher. Our trade was break even, so that was good. Well, not good, but not bad when you try to short into this crap. Inflation is rising. Good one, Anthony. That's a fact. Inflation. Who knew inflation was going to rise? Not me, probably. I know it's hard when you see the market doing what it's doing to envision a world where the market crashes or pulls back. But remember, there's a very famous quote, and because it's famous, I don't know it. I'm going to paraphrase it as best I can. I really don't know it. I know the gist of it, though. In 1929, there's one of the most famous bankers in the world. Again, don't remember the name. This really was said, though. I can Google it. Basically said, our times of economic failures and economic issues are behind us. There is nothing but prosperity in the market ahead. We will not see any reversals or crashes in the market. This was in 1929. I think it was 3 days later the market was Black Monday and the Great Depression started. So remember, when everybody's telling you how good it is, that's a warning. It's a big warning. because there's telling you how good it is. Like, man, Nvidia's doing really well. They're a good stock. And there's guys, markets don't go down anymore. And shorting the market or thinking we're going back to 6,000 is stupid. Those are two very different attitudes about the market. And we're in the latter. We're in the attitude where people don't think the market can pull back or crash. People don't think we're in a bubble. They think that March of this year was the chance for the bubble to burst, and it didn't happen. So there is no bubble. It's just the new norm. They're going to tell you all of these different things, and they're going to be right for a time. They're going to be right for a time, and then when that time is up, they're going to be so wrong that they're likely broke, and those because they're going to be over leveraged in the market, and that's where you don't want to be. And that's all I ask is that you just prepare yourself for potential fallout, because I think the potential is extremely high. I'm not saying you got to sell everything and hoard cash, but you can put it in safer places. You can do safer things. You can watch what banks you're in. Bank of America is not a place I'd like to spend a lot of my time or a lot of my money. Just saying. Is this going to be look above a fail or straight trip to 7,500? You get your one day max up here at 74.90 for today. I would say probably. I don't know if it's going to be a look above and fail, but I could definitely see where they come up here and do this for a while. If they fail directly and fail sharply, that would be an interesting outcome. They're doing this on a negative 778 ADD, negative 780. That's not a typical thing. That's not a breakout type of setup. So they're doing things that are abnormal, and again, the more abnormal things that enter the market, the more risk there is in the market. Be very clear though on this, because people misconstrue what I say for some reason and can't hear everything that I say. They only pick out the very small sentences that they want to hear. This is a bull market. It is a very strong market. 8,000 is a very viable target. 30,000 on the NQ is a very viable target. I do not think that we have even started to hint at a pullback. That is not what I am saying. I am not saying we're crashing anytime soon. I'm saying that when support breaks, be very scared of what's about to happen. That's all. And support will break one day. Could be today, could be October, could be next year. I don't know. I'm not here to predict that. I'm here to ride the market while I can, safely, make money on shorter term trades, put money in safer places, and then get back into the market when it makes sense, which is going to be considerably lower in my opinion. That's all. That's all I'm saying. I'm not here to peddle fear. I'm not here to peddle crashes. I'm not here to say market's down 40% tomorrow, guarantee it. That's stupid. All of that's stupid. I am here to tell you what I think is safe for your money. That's all. I am trying to look out for the best for the people. That doesn't mean I'm not going to get long in this market when it makes sense or try to ride the bull as much as I can. It means I'm going to do it as safely as possible, because we are not in a risk off environment. I think we are in a heavy, heavy risk on environment. I might have those backwards. I can't remember. I'm saying the risk is high, in my opinion. That's all. And being cautious with your money is not a bad thing when I think you're in a high risk environment. All right. We'll wrap it up there. Hopefully my words of wisdom really shook you today and made you feel better. Just kidding. I have no words of wisdom. Anyway, guys, I appreciate you being here. Thank you very much. Sorry it wasn't more eventful, but hopefully you learned something about price action. Today is basically a tutorial on it. You can watch this video again. I would, if I didn't quite understand it, I'd go back and watch it again. I tried to explain it pretty cleanly. So hopefully you got something out of that anyway. If you did, like and subscribe, check out the rooms, check out the indicators. Thank you guys. We'll do it again next week. Don't forget we do the closing calls at the end of each day. Thanks, everybody.